Well, the S&P 500 is up 3% this year, but that's without help, I mean no help, from the energy sector. Out of the 11 major sectors in the S&P 500, energy is by far the worst performer, down 9%, and oil prices are down big as well, 16% lower year to date, even after a 4% reprieve yesterday on optimism that OPEC Plus will be making cuts. Joining us now to look at what is going on with energy and oil prices, bring in Matt Smith, Director of Commodity Research at ClipperData. So we got some headlines, Matt, this morning that OPEC, which has their technical committee meeting today, by the way, day 3, it was supposed to be a 2-day meeting, recommending a cut of 600,000 barrels per day, in addition to what they've already done. I've been texting with people at the meeting whether or not Russia's on board. Is 600,000 barrels a day, even if they do it, enough to firm up oil prices?
It doesn't seem so, Brian. One thing to consider here as well is that this is going to take a lagged effect. And so even if they do decide to cut and extend these production cuts, they're not really going to kick in for another couple of months. We've seen just with the latest meeting back in December there, the Saudis put pressure on Iraq, they put pressure on Nigeria to dial back their flows. We haven't really seen that coming through, at least from a Nigerian perspective. And so these things take time, and so really there is going to be a lagged effect, and so we shouldn't really see it giving a bump to prices, apart from that sentiment-driven kind of jaw-boning aspect of it.
Yeah, we're not seeing oil prices move that much now. Nobody knows how much is offline in China, Matt. Let's call it 1.5 million to 2 million barrels a day. And the longer that drags on, the more inventories go up. Do you see any path forward higher for either oil or oil stocks?
Well, I think what we're seeing, Brian, is when you have this fundamental shock like we've seen with the coronavirus, you've seen the market turn to the technical element of pricing. And so we've gravitated to that $50 mark on WTI like this kind of homing beacon. We're consolidating there. So as we get this positive news now from OPEC, from a potential vaccine for the coronavirus, we're getting some support coming back in now. The interesting thing with China is that what we could see is if we see prices stay low, they still take that crude in, they just put it into inventories instead. Rather, if we see prices start to rise again, they will then take that crude, refine it, and then push it out as products. And so I think going ahead here really is really going to be dependent upon the coronavirus and see how that develops in terms of that demand piece. But so much is uncertain, as you say, at the moment.
When you look at the big integrators, how do you think kind of in the next 3 to 6 months the price of oil at these levels plays out? Is it kind of a short-term blip, or do you think that this is kind of a major technical correction?
It seems like this is more of a new norm from the perspective that once we get up to that sort of $65, $70 level, perhaps on a Brent basis, you see demand concerns coming in. Once you get into the 50s, you then have these concerns from a spending perspective and hitting domestic production at least. And so what we should see, we already know that these guys are cutting back. We know that production growth in the US is slowing, that it could be rolling over here. And so prices in the 50s is only going to exacerbate that situation.